Hello everybody, it's Nick McDonald here from Trade with Precision. Thanks for joining us for this week's video on the dollar index and currency market commentary. Looking at the dollar index chart, what you'll see is it's Sunday night in the US, as you all probably know when I record these videos. And looking at this, we don't have the first daily candle of the new week yet. However, the currency markets, the cash markets, which opened a little bit earlier, if we come and have a look at euro dollar first today, we'll see that actually there's been some significant moves on news out following the elections coming out of France on the weekend. And what we've got here is a significant, it's not major, but we've got a fairly decent move down. We've got a bit of a gap on euro dollar. We don't normally get huge gaps over weekends, but we can do obviously when this news happens. And we've had news come out, and we've had a bit of a gap down, and now we're breaking down below this big key level we've talked about before of 1.3. So that's clearly quite bearish for the euro, as we can see obviously from the chart, but therefore bullish for the dollar. So let's come back to the dollar index with that in mind, and we might just come back and look at euro dollar a little bit later. But bear in mind that it is down, just below 1.3, pretty much at 1.3, you could almost say, in terms of we're down around support right now. We could break below it, could be very bearish, or we could also bounce off it. But we're there right now. Come back and have a look at how this is likely to translate to the dollar index. When we see the first candle, what we're likely to see here is the dollar index trading up around 80. So we're going to see it trading up around here, and that's going to be right up at resistance. So as Trevor said last week, what we had was we had a lower high and we've broken down to lower lows. That was the start of a downtrend, but if we kind of just zoom out and look at this weekly chart, it's still quite scrappy. So we do have lower highs here, we do have slightly lower lows. We have the first indications on a daily chart, but it's still quite scrappy. And in fact, if we looked around here and just thought, well, actually, even though we've got a number of lows and this low slightly lower than that one, we are still somewhat consolidating. There's no real clear direction there. But if anything, the probability is slightly to the downside, especially when we come and look at the monthly chart, take that into account as well. Very bearish candles, and looking like, when we do finally get a decent push down below the lows of these candles, in fact, we've got around about 3 months of candles there with similar lows. When we do, or if we do finally get a breakdown through there, we're likely to get quite a sustained move down. But for now, it's not playing ball and actually looking like going up, and looking like being up a little bit again today based on that Europe news. So what are we looking for here then? Well, one thing is that gaps mess up charts a little bit. If we start to see gaps on charts, I don't like it as much, just because I like to see these nice clean flowing charts. We're likely to see this gap up towards 80. But the question is, what's likely to happen at 80? So let's come, and I always draw Fibonacci lines in, and we go from the most recent high down to the most recent low. I like to see pullbacks of around about kind of 50 to 62%. If we draw this in, we're going to see that anything up around 80 is going to be more like a 78% pullback. That's a big pullback. It's kind of the extremities of a move. Anything above 80 will definitely be bullish, but 80 itself is going to be a significant resistance level, as it has been in the past. It's also a 78% Fibonacci level. Then by the extremities of the move, I mean, if it gets above that, it's actually more than likely to go higher. I don't need to see it break up above the 100%, which is the previous high. If it breaks above the 78%, which in this case is around about 80, it's more than likely going up. So this is going to be a very key level. We need to watch 80 very, very closely, and I mean in the early hours of this week, and certainly the first day of this week being Monday, and looking to see if we break above 80 or if we hold 80 and come down. If we hold 80 and come down, then as Trevor said last week, we're still in a downtrend. This daily chart's making lower highs, it's making lower lows. If 80 holds, it will also be at a lower high, likely to go down. However, if we break above 80 and hold above that, then actually the news that if Europe looks like it might be actually changing some of this momentum, and we could have a short-term period of going higher. All in all, like I say, we are still in quite a sideways market, regardless of any news and regardless of anything happening on the charts right now. But certainly 80, and as it's continued to be, even in a ever so slightly trending market like we've got now, or even if it was a completely range-bound market, trading still occurs for me around these key levels, and 80 is the key one where markets are going to be opening up today. Let's have a quick look. Let's jump back to euro dollar and have another look at that. So certainly, like 80 being key on the dollar index, well, 1.3 is even more key on euro dollar. We can actually see it breaking further down below that. It's dropped about 15 points or so since we looked at it just a few moments ago. So this is looking more like breaking 1.3 now. It's also breaking down. You can see it breaking down through this prior low. So it's looking quite bearish there for euro dollar, which is going to be looking even more bullish for the dollar index. But obviously needs some very close watching in the early hours. There's no reason to go hurrying in and thinking I've got to catch a piece of this move. It's the case I like to let the news digest, watch, wait and see what happens, and then trade the opportunities that come along. For example, I don't need to feel rushed to trade short on a break of 1.3. There'll almost always be a retest and a chance to rejoin 1.3, with the trend. Sorry, if the price pulls back to 1.3, a chance to get in around there again. But also, if the trend is so strong that it continues downwards, then there's just opportunities on the, with such a strong trend. If that is what develops, there'll be plenty of opportunities to join in that prevailing trend. So I'd rather watch and wait and see. But euro dollar very, very key at that level, much bigger level than 80 on the dollar index. So one to watch in tandem. And then if we just come and have a look at cable GBP USD and have a look here, this is also showing some signs here. It's actually, we had nice run up, so bullish pound, bearish dollar, but now what we've had is this little bit of a pullback, bearish pound and bullish dollar. However, one thing to note here, it is right in the kind of point where that should turn around. So it's right in the point where if the pound turns around and starts getting strength here, then the US dollar is going to get weakness. Just another little indication of a potential turn back down for the dollar index at around about that 80 level. So just coming back and looking at the dollar index and wrapping things up, we're going to see the dollar index up around 80, a little bit higher, even depending exactly how euro dollar is going ultimately before we see this first print of the daily candle on the dollar index. It's going to be trading up around those levels and looking bearish if we hold that level and come down, but otherwise if we break above 80 and hold above 80, then looking quite bullish, maybe even to run up to 81. But like I say, I'll be watching, waiting, digesting the news first. I'll be looking to trade dollar index around about 80 on both the long side and the short side. That is the key level, and especially in, regardless of news, what is ultimately more range bound than a trending market. Key levels are really where we want to be trading. 80 is the closest one. It's likely to provide trading opportunities on both the long side and or the short side this week, and that's what I'll be watching, deciding on the best direction for trading opportunities and taking trades around 80 as and when they occur. Of course, if we've got big moves this week, looking for shorts up around 81, and equally any move to the downside would be very interesting. I'd expect if we did continue down, we could even come down and make new lows again, although that would be a big thing to happen in 1 week. But certainly if we did get short from around about 80, we're looking for it to come back down in the next few weeks, come down and track down to new lows again, maybe down around 78.50. Hope that helps all. Happy trading. Speak to you next week.